Test 1, 2. Good evening, ladies and gentlemen. Welcome to the broadcast. I am Creole, one half of Untwisting the Game Crypto. Here we discuss all things Bitcoin, Stacks, Polkadot, and Cardano, NFTs, and the metaverse. We are not financial advisors, so always do your own research. And on today's episode this evening, I wanted to play for you a recording released by the Omfif podcast. That's Omfif, okay? Omfif is the official monetary and financial institutions forum. Let's learn a little bit about them, okay? Omfif is an independent think tank for central banking, economic policy, and public investment, providing a neutral platform for public and private sector engagement worldwide. With teams in London and the U.S., Omfif focuses on global policy and investment themes relating to central banks, sovereign funds, pension funds, regulators, and treasuries. Global public investors with investable assets of $39.5 trillion are at the heart of this network. So what's really interesting about this particular release, it hasn't been released on YouTube yet. That's why I'm bringing it to you now. But it was originally aired on March 14th, 2022, and it is hosted by Patricia Haas Cleveland. Patricia is the U.S. president of Omfif. Okay, and she's going to discuss key findings in this recording of the Boston Fed's recent Phase 1 report on Project Hamilton. If you need to know more about Project Hamilton, I'll leave a link above in this video. So I do a deep dive into Project Hamilton on that. So, but she's going to host two people. She's going to host Robert Bench, who is an assistant VP at the Federal Reserve Bank of Boston. And she's also going to host Aman Cheema. He is the Senior VP and General Manager of Global Real-Time Payments at Fizz. So I had to look Fizz up because I wasn't too familiar with them. But Fizz is actually an American multinational Fortune 500 corporation, and they offer a wide range of financial products and services. Listen to this. They process over $10 trillion annually. They work with about 95% of the world's leading banks, and they support 1 million merchants around the globe. So this is a major player when we're talking about processing transactions. Finally, before I press play, please click the thumbs up so more people are aware of the Fed CBDC Project Hamilton. Okay? With that, I am going to go ahead and get this started for you. Give me one moment.
On central bank digital currencies and what's next for Project on central bank digital currency.
Welcome to the Omfif podcast.
Welcome to Omfif's podcast today on central bank digital currencies and what's next for Project Hamilton and payment systems. Central bank digital currencies, along with cryptocurrencies and stablecoins, have leapfrogged to the top of regulators' agendas recently. In the U.S., in just the past 6 weeks, the President's Working Group and members of Congress have called for bank-like regulation of stablecoins. The U.S. Federal Reserve Board has now formally launched deliberations on whether to issue a CBDC, requesting public comments on its exploratory report by May. And just yesterday, it was announced that the White House will indeed sign an executive order this week to direct a range of U.S. agencies to examine and develop a strategy for cryptocurrencies. In the background, as we know, crypto activity has continued to increase, with the market hovering around $2.5 trillion, up nearly 10x in 2 years, and with more than 100 central banks now undertaking efforts to explore or introduce a digital currency. But today, we'd like to return to the original and primary instigator of all this activity and cause for disruption of the traditional banking system. And that is the need for faster, more efficient, and accessible payments mechanisms. So Omfif is especially pleased to welcome Robert Bench of the Federal Reserve Bank of Boston, where he serves as an assistant vice president in the Secure Payments Group, and Aman Cheema, senior vice president, Global Real-Time Payments, Strategy, and Innovation at FIS Global, to discuss Project Hamilton and what happens next, particularly focusing on the practical aspects of a CBDC in terms of improving payments. I'm Patricia Haas Cleveland, U.S. President of Omfif. Welcome, gentlemen. It's a pleasure to have you here today. Robert, let's start with you to set the stage. You were a leading player in the Boston Fed's Project Hamilton and recent report on Phase 1, which looked at a high-performance payment processing system designed for CBDCs. Can you share with us the key findings and the most important takeaways regarding a central bank digital currency and its potential to improve payments?
Well, first, thank you very much for having me, Patricia. This is a wonderful opportunity to discuss our work on Project Hamilton. As always, I need to start with some disclaimers. My opinions today are my own and don't represent those of the Federal Reserve Board of Governors, the Federal Reserve Bank of Boston, or the Federal Reserve System. And then secondly, Project Hamilton and the results of Project Hamilton discussed today should not be seen as indicative of any preferences or directions that the Federal Reserve is taking with regards to central bank digital currency. Now, to your question of what were the key findings for Project Hamilton, I think first and foremost, from a high-level perspective, we think that we found that decidedly technology can and should inform policy, and that policy can and should inform technology. We think that there are significant open questions to remain answered on central bank digital currency from both the technology side and the policy side. And we think that through technological research, we hope that we answered some of the policy questions, or at least we contributed to those questions. Second, I don't think we discovered this, but I think we reaffirmed that with the right partnerships, governments and government organizations can do compelling technological research and are capable of innovation. For ourselves, we were extremely fortunate to find partnership through the MIT's Digital Currency Initiative and their leadership through Neha Narula. And interestingly enough, this has happened a lot in the past. Even the consensus mechanism itself for the Bitcoin blockchain arose from a government university partnership, that being through NASA and Stanford. So, I think that was a great finding for us, is that we could still do great things. On the technology side itself, what did we find? So first, what did we try to prove? We try to prove that it's possible to build a high throughput, high settlement, high security, and high resiliency system for transaction processing using new forms of technology. So first, I think a key takeaway is based on the assumption that we did not have a malicious actor as part of our system, we did not find traditional blockchain architectures as ideal for maximizing transaction throughput or settlement finality. While certain components of blockchain technology were used, for example, we use the unspent transaction format that Bitcoin uses, and we use SHA-256 hashing for security, we did find that assuming a malicious actor and using traditional blockchain consensus models such as proof of work or proof of stake were not consistent with maximizing transaction throughput. That's one. Second major takeaway we had was through our two-phase commit software model, was that removing transaction ordering enables a system to scale potentially linear when it comes to transaction throughput. We found our first model, which had specific global ordering of transactions, maximized or leveled off in this transaction throughput around 150,000 transactions a second, which albeit is quite high. When we removed that ordering system, we were able to get transactions that appear to be linearly scalable that we maximized at approximately 2 million transactions a second that were really only limited at current time by the amount of computing resources we've chosen to allocate. So those were the two big takeaways that we found in our research.
Yeah, that's very interesting around both of those, what your discovery was, both with regard to blockchain and the ordering question. Also, it's very encouraging that the project was open source, because in terms of your first point about partnering, and by partnering, a lot of these issues can be solved, I think it's very relevant to a lot of the private sector participants out there. Let me turn to Aman now. Aman, at FIS, you've been very involved in looking at CBDCs and assessing their impact on the payment systems. And most importantly, you are in fact a practitioner in the ecosystem, so you bring a very practical and pragmatic perspective from the end user, if you will, or at least the participant perspective. Two questions for you. You recently said that CBDCs could be a watershed moment. So I'm curious, what exactly did you mean by that? And secondly, we know that FIS has created a CBDC sandbox that countries can use to assess the feasibility and viability of launching a CBDC. So what can you tell us about this and any findings that came out of this, particularly any findings that might be relevant to some of the work in Project Hamilton and that Robert just described?
Sure, yeah. Firstly, thank you, Patricia and Omfif, for having myself and FIS here on this podcast. And the usual disclaimers, these opinions are of my own and not representative of any of the work that we're doing directly for banks and around the world. So on your first question, watershed moment, where that's coming from is from a place of innovation, right? If you think about all the forms of payment that exist today, and then over the course of history, how those payment methods have been introduced and evolved over time. We started with, I'm going to start with cash and check. I'm not going to go beyond before that. Cash and check, and that in some markets most markets still exist, but they have evolved to digital payments. You've got ACH payments, you've got debit and credit card payments, new digital formats coming through, such as crypto and stable coins. When we see the digitization of actual central bank money, reserve money, we think that's going to open up a host of opportunities, a host of innovations, domestically as internationally. So, I kind of akin it to like, this could be the internet moment for payments. Could be the internet moment for payments. And that's what, I was referring to as a watershed moment. If you think about when the internet was introduced, and still we're going through the internet age as we speak. Look what it did to a lot of the verticals, manufacturing, retail, shipping, logistics. Everyone, as we've seen through the pandemic, the internet helped a lot of individuals and consumers and businesses through the pandemic because everything went online. Now, I think if CBDCs come through and major economies like the US and others introduce a CBDC, I think that could be, could open that Pandora's box of possibilities from which, the market will thrive from.
That's great. And in your own experiments, and this is not to ask you to comment on any particular currency, but are there any findings as you've been assessing CBDCs in terms of what might be relevant for either the Project Hamilton or just in general?
Yeah, I'll give some general views on two things. The type of experiments that we are seeing and observing, being asked to participate and run on behalf of various institutions around the world, central banks mainly, and some of the findings that are coming out of there. So what's interesting is the pace of work in this topic, right? Like 90% of the world central banks are now conducting some sort of study on CBDCs, but over the last, say, 9 months, we've seen a lot of those studies accelerating, particularly in experimenting on CBDCs. So that's one takeaway. The level of experimentation is increasing. Secondly, the experiments that are being conducted. Now, like Project Hamilton, there are some experiments like that being conducted as well by the central banks around the world, and dare I say, commercial banks and wholesale banks, understanding how can the technology choices, the various choices that are available, how can they inform design decisions and policy decisions? So, like Project Hamilton, TPS is one area. Transactions per second, how many say digital payments can be processed. Most central banks who are, if you look at real-time payments as a proxy, most central banks would want their transactions per second to be in the range of thousands, right? Single digit thousands, 1,000, 2,000, 3,000. As we see digital payments growing rapidly, we expect most central banks to have a TPS requirement of 10,000, 20,000. But when CBDCs come online, you think about all that cash being digitized and cash transactions being digitized, you need to be in the realms of millions plus transactions per second. So central banks are wrapping their heads around that. Can the infrastructure and speed and resilience that's required, all wrapped around in security, can that be provisioned? So you got a set of experiments around the technology, the processing power, the processing speed, the resilience, and security around it. Then you got a second theme of experiments where these are more functional and orientated. Offline payments, how will they work in a digital world if my digital dollar sitting in my wallet and there's no internet, there's no 3G connection, no 4G connection, how do I still make a payment? So a lot of experiment thinking is going on along those topics. And then you've got actual use cases, and that's for me was very interesting because payment flows exist today. I can go and buy my goods online and pay with one of my debit or credit cards. I can go to my local store and buy my coffee today with cash. How is that going to change if I have a CBDC in my wallet? And that's very encouraging because I think that's what's been missing from the CBDC conversation for the last year or so, and been absent is the actual use cases. So we've seen a lot more experimentation requests around use cases and how would a CBDC work in existing payment flows. And some of the learnings that we're seeing from these experiments are technology isn't the issue here. There's so much technology out there now and actually poses a good problem for central banks around the world because they've got more options than they would have, say, 5-10 years ago, right? So technology isn't the issue. And then the use cases itself, I think that's going to be it's going to pose more questions, unfortunately, I think, to decision makers, policy makers around the design features and design choices a central bank would make. But what's also encouraging is some of these outputs, as we've seen some of the G7 work, a group working together on topics like this, that there's an opportunity now to harmonize some of these design choices. So domestic transactions could be great, but international cross-border transactions is where I personally see a lot of benefit for CBDCs. If some of that interoperability, some of that harmonization in the standards of CBDCs with large domestic economies being harmonized. So we've seen that conversation track kind of picking up as some of these experiments are starting to be conducted.
Right. Well, you've touched on a lot of points I actually want to come back to, but I think as we just move down kind of from the technology side of it, it's very interesting that you said that central banks are going to be expecting the TPS, the transactions per second, to be in the millions. And it's great that what's coming out of Project Hamilton is that they indeed have found one processing system, depending on how you structure it, that could be 1.7 million per second. So that's very encouraging. And I'm sure, as you said, a lot of it has to do with the design features, which are really going to be a function of policy decisions. But let me go, and I'm also glad you said what's really been missing is the discussion about the use cases. So I do want to come back to that. But first, I'd like to go back to Robert. And I think, again, we've touched on this, but a big point of concern has, in fact, been the whole real-time payment system. And so I guess one of the questions I'd have to you, Robert, is how do you see a CBDC affecting the need for and other initiatives regarding real-time payment systems? We obviously have the FedNow Payments Initiative underway. So maybe you can comment on that. And then something that's more tangential, but it's something that is semi-related, is with all the work going underway with stable coins, with the explosion in the crypto market, if you eventually get a highly regulated stable coin, which there are indeed calls for now, do you think that will solve some of the questions around a central bank digital currency? I mean, how do you see those existing in tandem, or one over the other? So those two questions for you.
Yeah, well, thank you, Patricia. So when you think about real-time payments, where the Federal Reserve is going with FedNow, and then the alternatives that are coming out regarding stable coins, I'll start with the notion that right now, at least in the U.S., payments work for most people. Not all people, that's clear. But digital payments, real-time payments, they work for most people. I purchased my coffee this morning from the Boston Fed cafeteria. I put my phone down on Apple Pay, and within several seconds, my transaction was fully processed. So that worked great. But I'm an employee of the Federal Reserve. I'm an extremely fortunate American. So when we think about what's needed now and then what's needed in the future, I think that's a good differentiator from FedNow versus our technological research into central bank digital currencies. Right? FedNow is, in its name, addressing the now. The team of the Federal Reserve System has built to create FedNow from the ground up. It's an incredibly impressive team, led by a former senior executive at Google. And their build is a production build. And I think that's something that, if it's not emphasized enough, it needs to be, is that the gap between research software and production software is massive. Project Hamilton is an extremely simplistic piece of research software with very few requirements. We did that on purpose. FedNow has a multitude of requirements. Any payment professional who's trying to integrate with central banking systems and credit card systems and commercial bank systems would know is highly difficult and highly complex. And they're solving that right now. And they're solving that ahead of schedule, which is incredible. And they're solving what we need now. With Hamilton, the starting point there was stable coins are here, right? Money is moving on new rails, and it's moving fairly quickly. Early on with stable coins, you had Bitcoin-based stable coins. That was Tether on the Omni network. They moved to Ethereum-based stable coins, which move a little bit faster than Bitcoin, not considerably. And now they're moving to higher throughput blockchains. So we know that those are happening. What we also saw happening was that the potential need for higher throughput numbers or higher volume numbers that we were seeing, at least in the U.S. So when we tried to ballpark what were our requirements for transaction throughputs and volume throughputs on Project Hamilton for our extremely simplistic system, we looked at what were the most stressed payment systems globally on the retail side, and for that we looked at Alipay and WeChat on Singles Day. Right? We took that as a great metric of this is the single biggest moment of stress on a payment system where a significant population uses these things over mobile payment systems. And that's where we effectively came to 100,000 transactions a second. So that's kind of where we were going with that question. So while there's significant complexity to be drawn out, we thought that we need to look 5, 10, 15 years down the road when payments may be done significantly more on mobile systems or digital systems, that there might be significantly larger amounts of machine-to-machine payments or automated payments, right? The example there is the Amazon stores you walk into and it automatically transacts for you. There's no checkout process. But what if a significant part of all retail activities happen that way? So those are the kind of things we were thinking about of what does payments look like in 2030 and what type of transaction numbers and settlement finality functionality numbers might be required, and just stopping there, not doing the extensive build that a FedNow would have to do, or in the private sector's case, say a Zelle would have to do to understand all the complexity and requirements. With regard to stablecoins, I think we look at stablecoins as very interesting technological projects for us to learn from and to get metrics from and understand how those technology works. As been reported, a large number of my team came from a group that built a pre-existing stablecoin, so we had a good starting point there. But we want to learn a lot more. With regards to the high regulation of stablecoins and whether or not there's a substitute factor for central banks or existing commercial bank payment systems, I think that's very much a policy question, and I'll defer to policymakers on that answer.
Got it. So, Robert, you talked about having a look down what's happening in terms of growth going towards 2030. Let me go back to the use case that Aman touched on and ask him from his perspective, how do you see the use cases growing? And let's break it down in terms of, peer-to-peer, C2B, consumer to business, or business to business, or business to consumer, or government to consumer. How do you look at these various segments in terms of the move towards 2030 and starting with now as things are starting to move very quickly?
Yeah, and this is where it gets quite interesting because, as we just mentioned, it's the payment systems today are in most developed markets very efficient, right? It's very easy for me as a consumer to buy my coffee and buy my goods online, etc. But when you go into when you look at those use cases, thinking how is the CBDC going to improve that experience, right? And this is the first theme that we see, I personally see, that's going to emerge as a result of the CBDC conversation is me as a consumer, I have a choice. I can pull out my cash. I can pull out a check if I still have a checkbook. I can pull out my credit or debit card. And in some markets, you got peer-to-peer apps as well, which you can use. How's my choice going to change? Is one element of that conversation, but me paying whoever merchant I am paying, if I'm paying for the small business that's running the coffee shop on the corner, or a major global online site where I'm buying goods from there, the merchant's choice could be different, right? They may have a better transaction processing cost for different forms of payment. So they may want to encourage me to pay in a particular form of payment because they have a lower transaction cost, or there's more data going through one particular payment type, and they want that data to personalize my experience with that retailer. So this point about consumer choice, merchant choice is going to come up as a theme. And I think those choices are good. I think it's good to have choices, encourages competition, encourages innovation, but that's one of the themes going to come through. So each of these use cases, look, the theme of choice is going to emerge even more greater. So we look at different use cases. Business to business payments is widely talked about as still being quite inefficient. There aren't that many choices. If you speak to big businesses as well as small businesses, if you talk to them about what their pain points around running their business, they always cite payments, costs, payment processing times, how long it takes for funds to land into the merchant's accounts once the transaction's done. So I think that's going to be a lot of innovation and a lot of support that CBDCs can provide in business to business use cases, domestically, but even more significantly in cross-border. And I think the most obvious one that got talked about a lot, specifically during the pandemic, is government payments, checks and support payments. A lot of nations issued support to citizens and businesses. Some were distributed by checks, some were distributed by ACH payments. I think this is a great use case that will get examined a lot, where the programmability feature that's available now with CBDCs will get examined a lot, because you can reduce the fraud, you can reduce misuse of funds, etc. So I think that's a great use case, a great payment flow, where CBDCs can add a lot of value to both the sender and receiver and managing the risks. So that's on the retail side. But when you go into the wholesale payment side, there's a whole other set of use cases that payment flows where CBDCs could really fundamentally change some of the economics of the transactions where that payment flow is being supported. And I think those will get analyzed probably more so than some of the retail payments, is my view.
Yeah, they each bring their own set of opportunities, but challenges. That's great to have touched, both from Robert's perspective and your perspective, Aman, on some of the benefits, even if work still needs to be done, but these use cases as to how CBDCs could be really value added across the board to consumers, to businesses, to governments. I'd like to now turn to the risks of introducing CBDCs. And I think the one that's been mentioned the most, or you certainly hear about, is the role of financial intermediaries and the threat of potential bank disintermediation and threat to financial stability. So, Robert, just turning to you, if in fact the role of banks may be threatened, some suggest, that would raise questions of financial stability, which is in effect your biggest day job as a central banker. So do you worry about this? Do you worry about challenges to fractional banking?
Thank you for that question. With Project Hamilton, our research was exclusively focused on building a research transaction processing engine. By design, we structured that transaction processing engine to ensure as much flexibility as possible for policymakers to make critical decisions on questions like programmability, privacy, interoperability, and lastly, intermediation. Some of these questions are heavily weighted towards technological research. We think privacy and programmability are two areas that we really need to research deeply from a technological perspective to provide a lot of data. Intermediation, we think it's much less so. We think intermediation is a critical policy question. And very fortunately, Patricia, there's no place better in the world to answer those questions. It has more brilliant economists than the Federal Reserve Board, right? That's where our real strengths are. And so we leave that question to the Federal Reserve Board to model out and to answer all those questions. I think the Federal Reserve Board has been extremely clear that the model is do no harm. And so, our job will be to build the technology to provide data to policymakers when it comes to technology. But the brilliant women and men at the Federal Reserve Board are going to do a lot of that research on the intermediation side. I think from the technology side, I think one thing we see, and I saw this when I was in the private sector, is, you don't bet against the American private sector. They are incredibly resilient and they tend to respond to whatever gets thrown at them very quickly. And that's kind of America's secret sauce. So we're going to keep working and trying to build out technology. We hope at some point in the future to bring the private sector in a more collaborative way. But the particular question about intermediation models is absolutely a policy question for Washington. And I'll let Aman take the hard part of that question.
And that's great. And I think that's a clear case where it's really the policy decision is going to drive the technology design, because from what you said, the technology is there to accommodate whatever those decisions are. But let's ask Aman from sort of the market consumer perspective, what do you think about sort of risk to financial stability? Do you think consumers will substitute CBDCs for bank deposits? And if this happens, this could be a big threat to the banking system. I mean, as we know, the Fed also, aside from technology, it has many levers around interest rates, decision, and that sort of thing, or putting limits. But what's your perspective from sort of the consumer side?
Yeah. So from my perspective, from the consumer side, I'm used to my funds sitting in a regulated finance institution, and I know the security and protections in place with my funds sitting in a regulated finance institution. If there's a change to that, I think most consumers would think, well, why and what benefits to me? But most importantly, is it going to be secure if my funds are going to be sitting somewhere else? And before stablecoins came onto the scene and crypto came onto the scene, I would have kind of betted my house that central banks would not allow central bank money to sit outside of the banking system and put that and all the risk associated to that at risk. When stablecoins come on are now onto the scene, as we're seeing an issue, a perceived issue, and the president's working around this now, as you said before, there is people's money that is sitting outside of the banking system and which is not, and coins being issued by non-regulated, non-supervised entities. So that poses a risk. But as we've seen the volume of transactions that are happening in stable coins, there's a percentage of the population who are willing to have their money outside of the banking system. Now, motivations, etc., could be different to my motivations from my having my money in a bank account, but there is a shift. But I think mainstream consumers, the mass market of consumers, I think they would still like to have their CBDCs, their cash stored in a regulated finance institution that's monitored by the central bank and the supervisions, various supervisory boards that exist. I can't see personally that changing, but it does pose a very strong policy question around, is there an issue of fractional banking? How can technology be used? And I agree with Robert here. There's a lot of research to be done on the technology here to help manage and solve and ask question and provide options to how do you solve that question and problem.
We are unfortunately starting to run out of time. I have so many more questions for you, as I'm sure our audience would have. So let me just ask each of you, where do we go from here? Project Hamilton would go on to phase 2. We've already mentioned a lot of topics that we know are under discussion or need to be developed, whether it's offline functionality, whether it's interoperability, how do you work on a cross-border basis, the programmability features, smart contracts, et cetera, et cetera. Could you each give maybe sort of your top 3, what would you say needs to be focused on next? I mean, for you, from the perspective of the consumer, the ecosystem, what do you see, Aman, as needing for this to go mainstream? And Robert, maybe you can give us a peek at the top topics that you anticipate phase 2 to focus on.
Sure. So I think the things I would like to see central banks continue to do and projects like Hamilton going into phase 2 and other phases is more experimentation, more understanding from a use case perspective. What does use cases mean and how do they pan out with various design choices and policy decisions? More robust, more research, more experimentation will inform more robust decisions and ultimate decisions around implementing and rolling out a CBDC, whether it's a retail or wholesale. That's what I like to see. That's what I hope will happen. We are obviously seeing it in multiple markets around the world. So hopefully that continues, and the pace of this research, continues to pick up pace.
And I suppose with the Fed's comments requested by the end of May, there will be just another source of input as to what the public is thinking that might inform the Fed board about policy decisions, which will then not trickle down, but certainly drive some of the research on the technology side. Aman, tell us, what do you see as needed for CBDCs to go mainstream?
I think it's two main things. It's trust and education. The technology is there. I think there's very, very, very capable individuals who can work through those policy choices, policy decisions and technology choices, and can do enough experimentation and simulation to understand the effects of this. But for it to go mainstream, for it to be implemented, for me as a consumer business to use it, I need the trust, and I need the education. Right? When you boil it down to the simplest forms, it's the dare I say the logo on the dollar and where it's coming from. It gives me the trust in holding and using the dollar, and that just needs to be translated into the digital form.
Well, gentlemen, I think that's it for today, but thank you very much. Your comments were extremely insightful. You're both very engaged. All eyes are watching the Fed, but all eyes are also watching what's coming out of the private sector. So thank you for your contributions and for joining us today. Thank you very much, and goodbye.
Thank you for having us.
Bye-bye.
Thank you for listening to the Omfif podcast.
Okay, thank you for joining me this evening. Again, that was the Omfif podcast. Next steps for Project Hamilton and CBDC payments. It'll be interesting to see where they move this project forward and what they're going to do about security. So I will continue to bring this news to you because it's really important, because this is going to be the direction of the U.S. Fed coin, the Fed CBDC. Everyone have a good evening. I will be back tomorrow with a couple new episodes on CBDCs, Cardano, and Stacks.